Hello and welcome back to Explain the Charts. Today, we're looking at USDCAD, the US dollar against the Canadian dollar on November 14, 2024. The market is buzzing about recent news regarding the oil market, with the IEA, International Energy Agency, warning of a potential global oil supply surplus, even with OPEC maintaining production cuts. This surplus is expected to come from increased production in the US, Canada, Guyana, and Argentina, which could impact the Canadian dollar, CD, a commodity-linked currency. Meanwhile, Canada's housing market is struggling, particularly in Ontario and BC, adding further pressure to the Canadian dollar. On the US side, with Donald Trump's return to the White House, markets are anticipating less rate cuts in 2025, creating an interest rate differential potentially favoring the USD. This could lead to further strengthening of the USD against the CD. Let's turn to the charts and see how these events are playing out in real-time price action. First, we'll look at the one-day chart. The USDCAD has been on an upward trend since late September, rising approximately 550 pips over the past 6 weeks. This trend is likely fueled by the stronger USD and weaker oil prices. However, recent U.S. inflation data came in line with forecasts, reinforcing expectations for a Fed rate cut at the December meeting. This could temper the upward momentum in the USD. The daily chart shows consolidation within a 100 pip range between 1.3850 and 1.3950 for the past 2 trading weeks. This suggests a potential for a significant breakout in either direction. Let's zoom in on the 1-hour chart for a closer look at the recent price action. The 1-hour chart shows a clear trend of USD strength. The USDCAD has surged through 1.3976 key resistance, indicating a resumption of the larger uptrend. The pair has reached 1.4000 for the first time since 2020. This suggests a strong bullish sentiment in the market. However, with the recent consolidation and the potential for a Fed rate cut, there might be a short-term correction. The current price level is around 1.4050, and traders will be looking for a breakout from this range. If we zoom in further on the 15-minute chart, we can see even more details about the recent price action. The 15-minute chart highlights a recent bullish trend. The price has been testing the 1.4000 level and shows signs of breaking higher. The recent bullish momentum is supported by the news events we discussed earlier. However, there are some signs of caution. The pair is currently trading near the top of its recent range and might experience a pullback before continuing its upward trajectory. Now, let's go back to the 1-hour chart. The 1-hour chart confirms the bullish sentiment. The price action suggests that the USDCAD is poised to continue its upward trend. Traders will be watching for a break above 1.4050, which would confirm a continuation of the bullish momentum. A break below 1.4000, on the other hand, could signal a short-term correction. It's important to remember that the Forex market is dynamic and can change quickly. To recap, here are the key price levels to watch. Support levels: 1.3900, 1.3854, and 1.3793. Resistance levels: 1.4250. Traders should be cautious of a potential pullback near the 1.4000 level. A break above the recent highs at 1.3956 could lead to a significant breakout, pushing the USDCAD towards the 1.4250 resistance level. However, a break below the recent lows at 1.3850 could signal a correction in the short term. Things to watch for. The release of the U.S. October inflation data could provide further direction to the U.S. dollar to Canadian dollar pair. If the data comes in stronger than expected, it could boost the USD. However, if the data is weaker than expected, it could lead to a pullback in the U.S. dollar to Canadian dollar. The Canadian dollar's performance will also depend on the strength of the oil market. If oil prices continue to decline, it could weaken the Canadian dollar. Traders should also keep an eye on developments in Canada's housing market. A further decline in the market could add to the pressure on the Canadian dollar. Overall, USDCAD remains bullish in the medium term. However, traders should exercise caution due to the potential for short-term corrections. Thank you for watching Explain the Charts. Make sure to like, comment, and subscribe for more in-depth price analyses. See you next time.